All right, traders, moving along here. Want to talk to you guys about a very, very interesting subject matter, and it's called priced in data. All right, priced in data is one of the most misunderstood parts of assessing fundamentals. All right, so what do most traders think of when they think of fundamental analysis? They head over to Forex Factory and immediately they start trying to interpret if the market is going to be higher or lower, right? They had no real assumption, or they weren't following the data release, along from the last previous month and looking into certain other fundamental drivers that might correlate back over to that particular one, right? So, for example, let's say we have a retail sales number that's about to come out, and I hate shooting ahead for you, but I'm not going to tell you what it is. Let's just talk about it. Let's say we have a retail sales number that comes out that deals with the amount of retail sales in the United States, right? And that data release is about to get out, come out. Your idea is, okay, well, if retail sales is green and it's up 0.7, then the market should trade higher. And if it's red or point, let's say 5, then the market should trade lower. That's all you know. That's all you're trying to rationalize, and there's no other thought process in regards to what we have going on here. All right, and so folks, that's not how markets work. All right, so when you're trying to price in data, or what priced in data really means is basically when you're looking at an asset, all right, and a data release comes out, folks, usually people, smart market participants, aka smart money, has already priced that information in. There's a rule to this, and it's called buy the rumor, sell the news. All right? By the time the news comes out in regards to maybe what a particular asset is value is in terms of maybe, let's say it's retail sales. By the time retail sales data comes out, folks, most market participants have already put in their buys or sells in regards to what they thought retail sales was going to be months and months and months prior, potentially maybe even just weeks and weeks prior to that. Okay, so it's going to be your job to rationalize, okay, well, what is priced in data, and how does priced in data affect my trading? Because it's going to affect it very, very, very heavily. Okay, so let's go take a look at priced in data. It's staring us right in the face right now. All right, and so market participants pricing in data happened in 2017 quite dramatically. All right, so we have the 2017 chart up here, and so we have to go back and do a little history lesson. Right around this time, all right, right around this time here, where markets were consolidated. Okay, what you saw was Draghi, and you saw. So let's talk about what was going on in the markets during this time here. All right, this was early 2017. You can really say Q1, beginning of Q2. All right, here's April 2017. You can see markets were just ranging. And if I was to show you guys 2016, you'll see nothing more than an even larger range. All right, so here we go. Back 2016. Again, you see markets, massive, massive range. This is Donald Trump's election. We can use that as an example as well. But let's use this example over here. And so anyway, what we saw happening was, again, we saw markets fairly consolidated throughout 2015 and throughout 2016. But one announcement made by President Draghi right in this time here, notice that massive gap right there, right? One announcement from the head of the ECB, all right? ECB is the European Central Bank. All he did was mention that he was going to stop quantitative easing sometime in 2018, this year. Folks, look, we were about 8, 9, 10 months away from 2018 during that time. Yet, when he solely just mentioned that he was going to stop quantitative easing, and you guys are going to learn what quantitative easing is, but basically, again, they were increasing the supply of the currency, which was doing what? Lessening its value. Okay, because the more of it, the less it's worth. He was mentioning that he was going to stop that process, which meant that there would be more demand for the currency because there was going to be less of the currency. They were going to start taking some of the currency back out by paying off certain debts. Again, you guys are going to learn a little bit more about this in a second. But all I'm saying is simply him mentioning that in 2018, this policy is going to be enacted, this new monetary policy change is going to be enacted. Folks, we saw a very tremendous price move like we have never seen. I mean, I'm literally saying over the past 3 years, we didn't see this market break out of consolidation at all. All right, this is what we were looking at. Okay, markets are at the low. Donald Trump just got elected. Why do you think we saw two massive sell side weeks? During the weeks, Donald Trump got elected. Okay, we'll talk about that as well right now. I'll give you guys another example in a second. But as you guys can see, a massive trend unfolded in 2017. Don't let 2018 fool you, that pullback. This is what we were looking like. Folks, it was the largest trend that we've seen in such a long time. I mean, we would have to go back to 2014 to see that kind of sell side momentum. Okay? And so all market participants were doing where they were pricing in the future appreciation for the euro. They weren't going to start buying the euro once Draghi mentioned that, hey guys, quantitative easing has stopped. No, why would they do that? If they have a strategy or if they have a clear and concise idea that Draghi was going to stop the QE program, then they're going to get in it right now. Because by the time he stops the QE program, all the other smart market participants are going to already be bought in on that move because they anticipated that that was going to happen. Right? Because remember what investing is all about. You want to do what the majority of market participants are doing. You just want to do it before they do. Okay? And so that's interesting. That's just another great example of priced in data. So let's talk about this Donald Trump election here. Another situation where we saw more data being priced in. All right. So here we go. When was Donald Trump elected, guys? He was elected November 9th. All right, this date right here, a date that will live forever. Okay, anyway, so he was elected here. You can see a massive wick to the upside, lots of volatility that day. But then, strangely, you see, what was that? How large of a price move was that to the sell side? You saw a price move from $1.11, and by the end of the year, which was really just a month and a half, markets were at 104. Okay, so why did the market sell off? Right? I mean, 700 pips. What caused that to happen? Donald Trump wasn't president yet. He was only elected president. Folks, you know why? Well, it was because the majority of market participants were pricing in future economic strength in the U.S. So the U.S. dollar was appreciating in value month after month and week after week up until market participants started to figure out that wasn't coming in, right? That economic strength probably wasn't coming in. You got to remember, this was this massive pullback that we're seeing here. That was right around the time that people started to realize that Donald Trump as president may not be the best idea in regards to economic strength. And then they also started to realize that, well, this whole nationalist ideology that Trump has, that's actually bad for a currency. That actually makes the currency go in the opposite direction. And you guys can literally see here a massive move to the upside because of one, euro strength, and because of also US dollar weakness. That's what really exacerbated this price move. Okay, but what you guys need to notice how market participants priced in the information before it happened, and they were wrong in that anticipation. Notice how markets corrected themselves immediately once they realized that was probably not the best idea. You guys want to see some more examples of that? Let's head over to the stock market where you will see, all right, literally Donald Trump getting elected affecting asset prices in the banking sector massively. All right, here we go. Let's exit that out there. Boom. So what date is this here, folks? This is November 9th. Why do you guys think the day Trump got you remember how unexpected it was that Trump was getting elected? Isn't that interesting? So they couldn't price the data in. Remember what we talked about during price versus value. When you know the value of something, usually price follows it, right? Well, folks, people never expected Donald Trump to get elected, so they never tried to buy into the marketplace. They thought Hillary Clinton was going to get elected. This is Bank of America. All right, there's something right now called the Dodd-Frank Act. All right, Dodd-Frank regulations basically state that the banking sector, they can't do many of the things that they were able to do back before 2008. All right, there's lots of regulations in place. There's less leverage. You can't be a commercial shop and have a proprietary trading side of your banking system. And you guys can ask me all these questions about Dodd-Frank and stuff during the webinars. But I want you guys again to notice and rationalize how massive of a price move we see here. All right, when Donald Trump gets elected, immediately when people saw that he got elected, what did they do? They priced and gave value to these stocks, because what did Donald Trump say during his entire election? He said he was going to repeal Dodd-Frank. And since people didn't think he was going to get elected, and he did, all of the smart money thought what? Hey, Donald Trump's going to repeal Dodd-Frank. That's going to loosen up the banking system, and that's going to allow banks to make more money again. Because, folks, banks were not able to make as much money in certain areas of their business because of Dodd-Frank. It really made it so that banks, their revenue got tied up pretty heavily. Okay? But once he got elected, everyone priced in the information. They priced in the hopes that Dodd-Frank was going to be repealed. Because, folks, again, he got elected. There was no policy enacted. He didn't become president until January 20th. Yet all of this market move happens. Okay, so again, that's pricing in data. That is pricing in data. And then you guys can see after the fact a pretty decent sized price move to the upside. 2018, and then boom, you see another massive price move at the end of 2017 up in the structure. Interesting stuff here. Okay, here, let's go look at Goldman Sachs. Real quick, you guys will see the same thing. Goldman Sachs had an even larger price move. Take a look at that. All right, again, when did it happen? November 9th. All right when Donald Trump got elected, you saw the asset almost double in price from 180. The thing ended up running all the way up to 245. It's ridiculous. That's tens and tens and tens and hundreds of billions of dollars of investment capital pouring into these financial institutions, stock prices. Okay, all because of the anticipation that there was going to be a repeal of Dodd-Frank. They were trying to price in the information that was going to hit eventually. Once the information hits, folks, markets are already there. There's no more room for it to go. And that's the other part that I wanted to mention about priced in data. If data is priced in, folks, you're trying to play Forex Factory news results. I mean, you're doing it the rookie way. That's not the way you trade fundamental analysis. Okay, you anticipate, all right, you anticipate what markets are going to do based off of the rumors in the marketplace. All right. So no glancing at Forex Factory and trying to realize, okay, markets are up. Cleveland, the market sold off. Why did it do that when it was actually, positive data? Horrible. That's not what we're doing here. All right. And so you guys are going to learn a lot more about priced in data. It's going to be hard to explain it in just one video, but of course we'll talk about it more over in the strategy section, and I'll show you guys more examples of it during the webinars and potentially during the times where I go over some of the fundamental catalysts. All right, but priced in data is one of the most important things you guys need to understand when it comes to fundamentals. You are buying the rumor that these things are going to happen, and then once it actually happens, you're actually already hit your profit potential, because the market participants that wanted to get in on that information, they've already got in. It's only the dumb money that gets in at the high. Guess who we're selling to? As in me and you. We're selling to that dumb money. We're selling to the market participants who are trying to buy in on that information way too late. Because once they buy in, folks, who was that just bought in? They were the uninformed. After the uninformed, who's left to buy? Nobody. So you're literally selling to the dumbest people in the marketplace. Because then after you sell to them, there's no one else that was going to be willing to sell. Willing to buy into that market. That is why you liquidate at the high. And that is why it's very important for you to rationalize what is going to happen before it actually happens. Because when it happens, the morons who never even tried to anticipate it was going to happen are the ones that are going to be buying. And that's who you're selling to. Because then after that, you're done, folks. Who else would be buying into the market? I hope that ending there helps you guys make things a little bit more clearly. Okay, guys, keep moving along.